What is up, everybody? Happy Thursday, November 14th, 2024. Today's episode of Trading Trends, where we look at major movers today, below volume trading today, reminiscent of July 4 week or Thanksgiving type trading. Looks like SPY closed with about 35 million shares, which is on the lower side here, below typical averages. So digestion day, we said trees don't grow to the sky. SPY got a little bit tired. We'll look at the intraday chart and still, our medium term forecast. We have that accumulation phase ending around mid next week. We'll see where we are now and what the focus was today. So let me share the doc here. Boopity boopity bop. All right, here we go. So here we go. And this was really the focus. Let's look at the image here. It is a bear over. This is, my 3-year-old knows this, ambulance, the cross line. So healthcare was in the crossroads today. Not too good. And biotech. We were highlighting this before. But healthcare and biotech's lower. Biotech was down 3% through the XBI. Healthcare, we'll take a look at that, down 1.5%. I'm in these calls. That sector looks like trash. We'll take a look at the chart. Nat gas, a big move lower. Nat gas off several percent. We'll take a look. And industrials also in focus, not doing super well. And the new all-time highs for this XLC, can't stop, won't stop. If you own that is the Meta Google fund, new all-time highs for that group. It is always seems to attract investor dollars. It's very attractive. Yeah, Tesla lifting XLY, the consumer discretionary. Tesla pulled back very small, but it's been vertical. And XLC is just doing absolutely marvelous. And new all-time highs again for Canada. And this is with oil not having extraordinary trading sessions. So let's take a look. So here you go. That is the doc. Let's start with, that's me, a little tired and slow today. Went out in New York City last night with some buds. So I apologize if I don't know how to click things. All right. So let's take a look here. I said it pretty spot on. Did not know how to click things right now on my end. So is this showing? Okay. So here's the intraday chart where we started. Pretty ugly trading all morning or all day. We actually hit the lows at 12:30, right around that European close. We got as low as, I'm just going to round the handles here, but we got as low as 594. VWAP was 596, so not, amazing. And we tried to battle from 12:30, and we ended up closing right about 595 under VWAP. So a digestion day, nothing significant. As I zoom out here, we were talking about, my target for the SPY, still is my accumulation phase ending right around next Wednesday. So about 6 days from now. And my target is right around 595 to 600. So now finally, because you got this bar, this down 65 bit move today, there potentially is a little bit of room for buying. Just be careful. Now I like the risk reward a little bit better. I'd say pullbacks, we're going to take you to right around 585 or so. So here, by that regard, 7 points of downside and about 5 to 7 of upside. So it's kind of even in the middle here, but I do like the animal spirits and the more bullishness going over for the next week. Still, we'll see what happens tomorrow. Is Friday. We'll see if folks don't want to go long into the weekend or stuff like that. But do understand that we are less than 2% away from new all-time highs, and you have some crazy euphoria going on in other assets. Obviously, like Bitcoin. We'll take a look at IBIT and BTC, and I also saw a lot of trading in GameStop and stuff like that. So yeah, all like I said, through next Wednesday, still expect SPY on or around Wednesday to be at about 600 or so, 595 to 600, and then after that, about 2 weeks or so of digestion, and that'll probably take you to about 585. Folks are going to probably doubt the Santa Claus rally and this and that. It's simply just your opportunity. You can't be doing PRs on the treadmill all day and all night, right? So it's just going to prepare for a pullback, after here's the high bar on the 11th here. So it was, 6 days after the election, it was just straight up. You got to take a breath. And that's what we're doing barely. I mean, we pierced 600 on the 11th and now we close to 593. So totally healthy. I would still be, tilted long. I am tilted long. The past 2-3 days have not been, extraordinary, but the portfolio's had a huge double-digit percent swing from the 5th. So, it's to be expected. All right, so let's take a look at what moved up today. This is interesting. So market's totally in a digestion and, I don't even want to say the word consolidation, but a digestion phase. If you had like a, a massive Michelin dinner. You want to enjoy it and like try to savor and digest it for quite a little bit. That's what's happening in the markets here. It's interesting because when I had the video 2 days ago, there was nothing on the gainers side in a multiple sigma fashion, and today we have the same exact thing. So they're not flocking into things right here. Even the XLC and the Canada hit all-time highs. It didn't do it in a massive fashion, just a little bit more crowding into those areas. I've been repeatedly hitting new highs. So in the up moves today, there actually was nothing being gobbled up, believe it or not. So let's take a look at the charts that were multiple sigma movers to the downside. So healthcare down 1.5% is a big move for it. Look at this ugly chart. The highs were back here September 4th. That's Labor Day weekend when we were wearing shorts and a t-shirt. So different season indeed. The higher rates, I don't want to even say higher rates for longer, but obviously rates are up since the Fed cut and such. This does not look good. Have several triggers that went in here on October 30th. In terms of relative strength, what it was doing versus SPY and the Russell 3000. Also, just technically speaking, it broke under the 200-day moving average. So immediately Spidey senses start to say, uh-oh, something's wrong here, October 30th. And then it had a nice little rebound. It wasn't the biggest area that folks loved, say, after the election, but it did start the clock over. And here I started again November 12th. So we'll see what happens with this group. The 200-day is still rising, albeit very, very slowly here. But again, when you buck over the 200, under the 200-day moving average, and your high is more than a month to 2 months removed, you got to be really careful. The 52-week lows, just so we have that level, is at 129. The group I don't love, so almost opposite of what I was saying in terms of the market. I'd rather be bearish than bullish this. I'll talk my book in a second. But in terms of the chart in here and what I'm seeing, and with today's ugly bar, and to close outside the Bollinger Band here, you're going to get some volatility expansion. You're already at 4-month lows, not a great momentum move. So I like it to the downside, but the target's right around 145. So I think it's at its lower target already. Any pops could take it to 149, where it would buck that 200-day moving average and have that frustrating tug of war, as it were, for investors. I'm in the D's calls that are now, I'm pretty sure, set to be expired worthless, but I still have 5 weeks to go. It's way higher. I'm pretty sure I have them. The strike is I need it to pierce new all-time highs. If exuberance ever comes back to this group, in the short term, I think it takes it to 153 or so. So not a great space to be. There's a lot of talk, with RFK being the new health, whatever, General Czar, whatever you want to use the terminology. And Moderna is trading at new lows, as he's not, a big vax guy, depending on, the disease, whatever. Don't really care. I'm looking at charts here, not watching, news. But this chart looks weak. I think any pops to 149, you should sell it. And then you should probably be able to collect that downside to about 145, 146. So right here, I don't expect my XLV calls to get much worse, but because it's, like I said, it's at target, maybe a little bit more, but not a great group. If you get a little bit of a pop here above the 200-day, I'd probably sell it. Looks bad. All right, next move. Excuse me. Speaking of which, natural gas. So yeah, ugly bar here, down 7% today. The UNG, wowie, big move here. I was saying, in terms of, I'll just put it up here. I had my accumulation date start on November 8th, which would take me to about another week or so, a week and a half of bullishness. So kind of a surprising move. I thought this was going to base around the 21-day exponential moving average, which was 1356. It pierced through that and then some today. We'll see what happens. An ugly bar, obviously, today down 7%. I do like it still to the upside. I want to see how it trades tomorrow, obviously. But I do think this can try and make a move towards 14 and a half. So I'm not going to trade it. But I do think this could possibly bounce the other way if you have a position. I know some people do. Also, in terms of portfolio trading, myself bought one thing yesterday. I bought uranium. There's just a couple of things. I'll just pull up the chart since it's personal, and I'll get back to the moves of the day. So bought uranium today. It was up 30 bips. Essentially, I'm not going to get too into it here, but the 200-day to me is pretty staunch support down there at 29. I bought the January 30 calls, I believe, so slightly in the monies. And my target for this is to get very close to new 52 weeks high, about 33. So that'd be a 10% move, a nice gainer if it does so in the option. So that was my move yesterday on URA. And then lastly, the other big move of the day, lower. Again, there was no big moves up. So another move lower was industrials. This has been a very positive story. Look at the chart. One of the best ones we've seen from, that we looked at today, obviously, versus healthcare and that gas. But industrials looks very good. This is hit highs on the 11th, just 3 days ago, at about 144. Small pullback. I mean, down to 140 here. Ugly bar. Like this group, but in terms of what my target was on the upside, it was 142. And again, my bullish phase for this started about a week and a half ago. So my target 142, it got to 144. Now, possibly a little bit more bullishness to get to that point, to 142. After that, though, I do see probably more in line with the market pulling back mid to end of next week. Then I see this pulling back to basically where we are, a little bit lower towards about 138. So interesting space in terms of industrials. Okay, top three gainers of the past 5 days. I don't think this is going to surprise a ton of people, but let's take a look. Number one, of course, IBIT up 15% in the past 5 days, or an average of about 3% per day. Today, it gained back 2.5%. So obviously, everyone's talking about Bitcoin, of course. In terms of this stock chart specifically, or ETF chart, my target for this was about 45.5 to 46. So when you're trading 50, pretty monstrous. Surpassing of that target. Again, like I said, my target was about 46. So that would be, 50 to 46, nearly 10% decline. We'll see. I'm sure you saw Bitcoin go from 93K to about 88. So we'll see how this trades. But yeah, maybe kind of similar to what I said on the industrials, potentially a little bit more bullishness, but this is overdone, in my opinion. A lot of people bought that breakout. They wanted to see if it was going to break the March highs of 73K. They did it, and they just buy now, ask questions later, which I think is like Klarna's motto. Anyway, so yeah, pullbacks, though, I believe on this take you to about 42, and that is pretty massive. So in terms of the Bitcoin, this doesn't necessarily have to happen, but if you do get a swoon, I think like a 3% in SPY, obviously probably more in the Qs potentially. So in terms of Bitcoin, as I said, yesterday it peaked at 93,300. Now we're trading 88K. I think, over the next 2-3 weeks, if it cooperates with the market, although Bitcoin's obviously been dancing to the beat of its own drum, but I do see the next pullback taking to about 76. The only other thing, as I'm talking to some market folks, is not to get too much into this, but when you have these overbought levels, it's kind of like you're waiting for, I'll go back to it, like Taylor Swift to announce new dates for stadiums. The first one is gone. You can't get in. You need to actually create new tickets, right? New events. Bitcoin kind of has this. When these levels get overbought, it's rare, especially when in the 200 days in an upswing like this, as it's very healthy, great looking chart. These overbought levels are typically not revisited. So if you see this rebought level here from December, and this is BTC USD, not IBIT. So we're going straight to the source. So that's 45K. It bucked it a little bit. I understand it went to 40K, a 10% reduction. And then what happened? More overbought. It gets to that a little bit, again, revisited, but that's a moment of strength. So again, here, and you have to reinforce that this is with that breakout above March, about that 73K that we were talking about. I don't think those levels are to be revisited. So it's kind of crazy. To me, that is a big deal of Bitcoin kind of leaving the station. And again, that's a very positive, bullish thing if you're holding, obviously. So people might crap themselves and say, oh, we went from 93 to 75K, and that's it. It's going to crash and blah, blah, blah. Not at all. I think the train has left the station on Bitcoin. This was the breakout, excuse me, that we were waiting for. And just a monstrous bar on the 11th. I mean, here was obviously the election. It took it from 69 to about 76. And then just a couple of days later, we were from 76 to 88 in a day. I said when it's going to break, it's going to possibly go like 20% in just a handful of days. And that's exactly what we had. So all that being said, I do not think those levels are going to be revisited. It's pretty crazy. So if you're holding, congrats. And a bunch of people are saying when you intending on selling and stuff, look at the asset return quilt, if you will, Bitcoin versus, oil versus SPY versus everything in the past 10 years. The thing kind of doubles conservatively every year. So I know it sounds kind of crazy. I actually want to Google what Kathy Wood's estimate was for Bitcoin, but like conservative, I mean, not even conservative, but like my year-end target for next year, so New Year's Eve 2025, is around 200K for this. And people say, well, why aren't you just buying hand over fist? obviously because there's risk in this. This is about a 60 vol asset that does a double every year, or you could be in SPY, which is about a 13 vol asset, and it's done 30% a year, and it looks like it's going to potentially continue to do that. So you always have to risk adjust. But I would definitely allocate to Bitcoin, and don't say it's too late here. Obviously, maybe hopefully didn't buy 93K on the dot, but I think one of the best ways is to do, whatever you have, Wealthfront, Schwab, whatever, just buy this stuff, buy Bitcoin on a certain basis. Just do it regularly, buy $25 a week or whatever, and I think you'll be happy you did. So I bet the best performer in the past 5 days, not even close, 15%. You have to really squint to get to the next one. The next biggest performer is Nat Gas, believe it or not, and that's even with today's 7% slide. Nat Gas up 3.5% over the past 5 days. So interesting movements there. And then the third one we'll look at, we haven't looked at this in a little bit, but very important index, the IGV. IGV is up 3% in the past 5 days. Today it was down 1.3. Look at this, just a stair step from, so here's the day before the election, 92 all the way to 106 in just a week or so. So guys, trees don't grow to the sky. You can't just imagine looking at your account and just making double-digit almost returns in a week and expecting that to be normal. So this is way overvalued, in my opinion. This is heavy Oracle, I believe Salesforce, ServiceNow. A lot of those companies are hitting 52 and all-time highs, 52-week and all-time highs. But my full value on this, well, let me move that stupid box. My full value on this is 99, maybe 100. So this pullback absolutely to be expected. That 105 print is monstrous. I think that was way too far considering how far this it trades from the 200-day moving average, right? So look at how far the price is from the 200-day, even with a really nice steady incline. Look how far away it gets. It's pretty far back here in Feb. It typically goes with the overbought levels. Here, not so much in July, and here just absolutely magnificently high, where the stock is 80, the 200 days 86, and then all the way up here in the heavens, essentially we were trading at 106. So 20 points is a little bit too much right there. Personally, whether or not you're controlling your own algo, right there is probably a big reason for a sell signal. And then you have an almost bearish engulfing candle swallows the entire day's action. Here you have a wick, so it didn't do it, but that's an ugly looking bar, closed on the lows. I see this pulling back to about 96 to 97 over the next 2 to 3 weeks. So that would be a 7-point reduction. All right. So those are the top 3 gainers of the past 5 days. So on the long side, if you were in Bitcoin, Nat Gas, and specifically, this kind of tech software space, and congrats, you crushed the market. Now let's look at the not so fun side. And these are also, rates and Trump related. After the election, so China, they had announced news as well in terms of not enough stimulus to be announced. Put this down, money back on your mortgage, cut back rates, blah blah blah. But FXI, a big loser in the past 5 days, down 10% on an average of 2% a day. Today it lost 1%. Still see this being in distribution mode for about another week or so, down to about 29 or so. I think this 200-day moving average will hold as support, and that to me is enough. I'm in the January calls. Pretty much, the position obviously is not looking great right now. It was looking good even 2 days after the election. It still traded FXI as high as 32. KWeb, the internet tranche of this, has gotten hit even a bit harder, with FXI down 10% in the past 5 days, KWeb down 12.33%. Don't love the action in this right now. Still think this goes a little bit lower to about 29.5 or so. You might get a little bit, zigzags up and down, but still like this being in distribution mode for the next week or so. And then I think it'll take a couple weeks to get towards 31.60 to try and reclaim its 50-day moving average. But this again, the 200-day moving average is calculated from the inputs of the past year. This FXI has been trading under 29.5 all the way until late September. And that's why you're going to get that drift up right around that point. All right. So China, not a great area to be in. Told you my forecast on that. So I'm in that one. Here's another one that's been giving me pain. GDX. Look at this. All the way from 52-week highs, October 22nd, all the way to the 200-day moving average in just, whatever we just said there. So 3 weeks or so. The last time it was under the 200-day moving average was March 20th. So quite a bit of a different change here. Obviously, rates are a story with this. let this base a little bit. I don't think it's an awful place to form a position. I don't know what kind of massive upside you should expect. So let's just talk about it here then. So I think if you're getting this around 37, honestly, I think under like, so the 200-day moving average again, because I don't think you can see it here. The 200-day moving average is 35.19. I like buying it there. I think that's on sale. You had a very small chance there today. It dipped under and then it closed back up 0.5%. And this name, as I said, is down 10% in the past 5 days. I think this you need a little bit of mean reversion in the market. So like I said, if the distribution phase begins mid to end of next week, I do think you'll see folks swarm into this and kind of reverse their beta positioning. And you'll see this get to about 39.5. So again, volatility in this, big move, 36 to 39. That's, 10%. So we'll see what happens. And yeah, I'm in the December January calls on this. All right. And then the last one. So again, FXI down 10% in 5 days. GDX just about the same, down 10%. And the other one less, not as much of it a hard exit, but kind of a surprising movement. The semiconductors through the SOXX ETF down 6.5%. I thought this was going to have, and I talked about it, a better area to be in as of recent. I thought this was going to be one of the better spots to be in. So the other thing I have here is this specific ETF, very similar to SMH, but it's weighted differently. There is staunch resistance here at 240, the likes of which it hasn't gotten from since July 23rd. So concerning to me, I mean, and the 200-day moving average still rising, and that's at 226. So, I mean, to keep it pretty simple, I think it'll contend. I think it'll bounce up above here, this 226 mark, but there is a hard ceiling here at 240. And really, there's not much else I could say to it. It's kind of like range bound. I potentially will look at this tomorrow and try and sell strangles. You have higher lows here, and then seemingly, decent support here at 217. Although we could go a little bit lower to about, 215 to 212. We had traded there prior back here in early September. So a little bit of surprising movement for semiconductor. Obviously, you assume it's happening with super microcomputer, and they're just included into the S&P. One of the worst performances once someone got, put into the S&P 500, and then the returns after. So pretty surprising. NVIDIA's doing its thing. But yeah, surprising chart. Ever since, again, the Japan crash, that Nikkei crash, that August 5th, Monday, this group has not really looked the same. It's been just, chop wood, carry water. Had a very nice run here from September 12th and then through Halloween, and now it's back here having a hard time. All right. So yeah, I mean, I think it's range bound. I think it's going to live. It's still a wide range, but between 215 and 240. That 240 looks like really staunch resistance, and I think that's taking out a little bit of the euphoria in the group. It'll be exciting to see the year best of trades when I do the recap for the week tomorrow. If you remember from last week, it was usual Bitcoin, and then banks, and then semiconductors. It'll be interesting to see as 5 days have been lower here overall for the SOXX. All right, so top three absolute trades of the past 5 days. If you were long IBIT, 15% in your pocket over the past 5 days. If you were short FXI, 10% in your pocket, through it being short. And then if you were also short GDX, down 10. So it's kind of crazy. And this is why, like I said, the whole, roulette and the craps table, you want to have chips on different pieces. I'm in IBIT. And really, the portfolio's had a decent, pretty good week because of how much the alpha's performed. I'm in FXI, second biggest performer to the downside, and I'm in GDX, and that alpha is still being delivered through being long IBIT. And that's why it really pays to be in different spaces for when the market rotates. Alrighty, that is all, and I will see you all tomorrow for a end of week recap. Peace, and go Birds tonight. Let's take control of that division. Beat the Commanders. What a silly name. Bye-bye.